Most people are stuck in a system designed to work harder and not smarter. We're here to expose the strategies, the loopholes and the life hacks the 1% use. This is universal basic knowledge.
Every year, millions of people overpay the government by thousands, and in some cases, even more. Why? Because they don't understand deductions. The tax code is designed with write-offs built in. If you ignore them, you're literally volunteering extra money to the IRS. The wealthy don't pay less because they cheat. They pay less because they know the rules and they use them. So, for example, let's take the 4 most overlooked write-offs for most people. There are a ton of write-offs out there, but we're going to focus on these 4 since they apply to so many different people. Home office, travel, professional fees, and depreciation. So home office means that you use a part of your house for work. You can deduct a portion for rent, utilities, and internet. Travel, flights, hotels, even part of your meals if it's tied to business, professional fees, your accountant, your lawyer, your tax prep software, anything that you're going to use to run your business. And depreciation allows you to spread the cost of major assets like a laptop, a car, a camera, anything that you're going to use towards your business over a single or even multiple years. This is all legal and it's all very, very powerful. So let's start with the office. A lot of people are scared of the home office deduction because they think it's an audit trigger. And that's a myth. If you legitimately use a space for work, even a corner of your living room, you're entitled to deduct that square footage. So as an example, let's say your home is 1,000 square feet and your office is 100 square feet. That's 10%. If your rent is $2,000 a month, that's a $200 a month write-off that's taxed on your taxable income. Add utilities, internet, and even cleaning, that saving stacks fast. Business travel is one of the easiest wins. Flights to a conference, deductible. Hotels for a client meeting, deductible. Even meals while traveling, 50% deductible. And professional fees, if you pay an accountant, have a consultant, or even have subscriptions tied to how you do your work, those count too. Most people are forgetting these, but if you do them right, they will literally add up to thousands of dollars of savings every single year. So this one is huge, depreciation. It's also one that people don't really understand. So instead of writing off an entire expense in 1 year, you can spread it off over multiple if you didn't make enough income to have the full depreciation in that single year. So what this breaks down to is that if you, for example, have a car that weighs over 6,000 pounds, there is now a rule called the Section 179. Section 179 allows any vehicle over 6,000 pounds to be deducted up to 100% depreciation in a single year. That means if you buy a $100,000 vehicle that weighs over 6,000 pounds, this could be an SUV, this could be a truck, this could be any car, and it doesn't matter how expensive it is, as long as you're using it for business, you can deduct that across your income as long as you have enough income to make that deduction worthwhile. You can also deduct your business, your depreciation over several years if you don't use that in that given year. So depending on how it's used, this might write off thousands of extra dollars every single year. The same goes for other office equipment, laptops, cameras, office furniture, every asset that will last over years if you want to use a multi-year depreciation model. This is how entrepreneurs and contractors can lower their tax bills every single year, even without reinvesting in their business. They are literally able to save tens of thousands of dollars, and this can make or break your business. I know entrepreneurs saving tens of thousands of dollars every year just by claiming what's already theirs. A freelancer I know that was supposed to pay $18,000 in taxes paid just under $10K after you took on the home office discounts, mileage, and depreciation. That's $8,000 in extra cash flow back in their pocket. This isn't shady, it's the law, and knowing the difference and knowing that it exists is your key to being able to take advantage of it. You don't need to be a millionaire to use write-offs. You need to stop doing your taxes like everyone else does. Every deduction you claim is money you keep for you, your family, your business, and the future. And that's how the 1% think about taxes. If this sounds interesting to you, join our free community. You don't need to be rich to live like the 1%. You just need to learn what they do. This is universal basic knowledge.